Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, any questions you might have, what to expect short-term, long-term, what strategies work, what do not. We'll touch a little bit on trading psychology as well. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. So a little bit about myself. I started Tradespoon in 2012, so it's been 10 years. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally. My background is in technology. I was the CTO of several public companies. I was an investor in several IPO companies here in Chicago, and I love teaching, mentoring and teaching, and my background, again, writing, I have master's degree in computer science, so technology, building models, programming. Disclosures are very important. If you're new to options, please, or stocks trading, please visit optionsclearing.com, this link, to understand risk associated with trading options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we talk about trading plan, let's talk about current market conditions. Looking at the QQQ, we're off the session lows, right? Looks like, well, let's look at spiders, right? We retested 380 level. What was the low for today? 382. So 382, 380 level, you can see that's the main support. We were at 390 was the main long-term support. I thought we were actually going to bounce from the 390 level. So we're definitely overshot, mainly on the FDX news, right? Federal Express basically saying that the economy is contracting, global economy contracting, their business is down. I know FDX, last time I checked, was down over 20%, right? 22%, right? An outlier event, and you've seen the pattern with Adobe yesterday, down 20% on merger and acquisition news, acquiring a company, FDX, down 22%. So market is extremely nervous that Fed will over tighten. Spider dropped, retested 380 level, right? This is the key support level, and broke through the 390 level. So short term, obviously bears are in control, and for the market to maintain this bounce, it has to trade at close above 390 level. We do have a Fed decision on Wednesday. Market may or may not break through this level, but I would be bearish as long as the market trades below 390, because we retested 380 first time. I assume we're going to break through it sooner or later, whether it's September, in the next 2 weeks, or it's in October. We will revisit the lows. I still think that the lows will hold, 52-week lows will hold, but it's to be determined, I guess, because the sell-off is accelerating. Now we have these a lot of companies pre-announcing, like FedEx pre-announcing, and there's still high expectation that earnings are going to continue growing. So again, very important to go through this future rehearsal exercises, determining stop loss, right? So let's go through this exercise. Let's determine, what do you think the market is going to end up by end of October, by end of November, by end of September, sorry, by end of September, that's one, by end of November, and then by year end. Right, so by end of October, there's two scenarios, right? We're going to revisit the lows, 370, 360, right? So are we going to trade near one choice is, let's call it 370, 2 weeks, 370, right? That would be choice number 2. Choice number 1, we are back, at least half of the distance of 400, right? So from 385, 15 points up, 15 points down. 1. Okay, so that would be plus 15 points from where we're trading right now versus down 15 points, right? Another 2 to 3% down in the next couple of weeks. Again, so if you're bearish, right? If you're bearish and you think market is going to drop to 370, you have to determine your stop loss, and vice versa. If you think this reaction is overdone and market is going to rally, you have to consider your stop loss. So by end of September, right? So October 1. How many of you say 1 or 2? Good morning. Don, welcome back. Everyone is good. It's good to have you back. So take a moment to just think about it. And again, as a trader, you have to go through this exercise, right? You can be bullish, you can be bearish, but you have to understand, you have to determine the position size. You have to determine number of positions. So this exercise is extremely important. I'm doing it in terms of weeks because I think that's majority of our subscribers, but I know some of you are day traders. Then, however long you hold in the position, you have to go through this exercise. Even if you're holding position, for years or quarters, same thing. You need to determine what is the best case scenario, what's the worst case scenario, and that will help you determine the number of contracts or number of shares you're buying. All right, so Patrick 1, okay. Anyone else? Andre, Bart, Clayton, Dan, DLC, Don, Ed, Jacqueline, Hans, Catherine, Mac, Peter, Timothy, Virus, Walt. What do you guys think? Patrick, done 1. All right, so not a lot of participants. Dan 2. Okay, so we have probably half and half. I'm still gonna say, I'm gonna say 1. I'm gonna stick to my 1, even though it's, I think at this point 50-50. All right, but in 2 weeks, market is extremely oversold, right? Market is extremely oversold, and you do have this A, B, C. It looks like we are coming close to the C, right? So it's reasonable to assume that we can do something like this, right? And then sell-off accelerates, right? Market never moves in one direction, right? All right, so that's October 1st. Let's do November 1st. What do you think the market is going to happen in November 1st? Same thing. One scenario, we are retesting the lows, right? We're retesting the lows by November 1st, so 2. Maybe a little bit higher, maybe a little bit lower. Or we are getting, so that would be what? 385 to 360, 25 points. So 25. So it's reasonable to assume that the market can drop 25 points. And plus 25 would be 420. Scenario number 1. So going into midterm elections, right? Midterm elections, first week of November. Going into midterm elections, will we reach 2 or will we reach 1? Same thing. Let me know what you guys think. Jacqueline, welcome back. All right, Peter, 1. Okay, anyone else? 2? Anyone else? All right, I'm gonna put down 2. I think, again, I think this pullback will accelerate going into midterm election. From seasonality point of view, right? Usually September, October are bearish months, especially that bearishness continues. It could be all the way into the Thanksgiving or midterm elections, first week, second, third week of November. So it looks like we will retest, right? We broke through the 390, we retested 380. It's just a matter of time to retest 360. So I think we will retest the lows. I don't think we're going to break the lows, but it all depends on the earnings season, right? We do have earnings season starting, middle of October, right? So we will have earnings season. It will depend, if it's going to look like FedEx and Adobe, well, then we're heading much lower because negative earnings is not factored into the current price levels, right? We're still thinking about single-digit, double-digit growth of S&P 500 stocks, right? Analysts are just starting to lower their estimates, but still it's not factored in the deceleration or low-digit growth of S&P. So I'm going to assume that, companies' earnings will be, again, just like last quarter, they will be either in line with expectations or better than expectations. So I think this level will hold. So that's November 1, 2, and then year end, right? Year end. Right. 430, right? Maybe we'll get to 430. And maybe we undershoot maybe 350. Right, 30 points down, 45 points up. Sorry, 35, so 420, this is 410. So same thing, one around 420 or around 360, 350. So how many views by year end? Are we going to end up at 2 or are we going to end up closer to 1? Yeah, it's not the actual earnings, right? It's the future earnings. Yes, projections to the future. I agree. So it's not just the actual earnings of the previous quarter, but what the company says will, look like in 23. All right, then one. Anyone else? All right, I will put down 1, right? So down, up, down. Up, short term up, market is oversold, short term up, then down, then up, right? This pattern of down market, up market, down market, strong up market, down, up, down. It's reasonable to assume that this pattern will repeat. And this was a very important concept. You have to be long. One conclusion for this is that you have to be long and short the market at the same time, right? With options trading, you do spreads, right? Or butterflies, cover calls, but one leg long, one leg short. And you can build bullish position, you can build market neutral position, or bearish, long or short. Because why is this important? Because you don't really know where the market is going to go by October 1st, right? It's a flip of a coin. We could be at 370, we could be at 400, right? After the Fed, next Friday, we're either going to be at 370 or we're going to be at 400. There's no two choices, right? It's not going to just magically stay at the same level. And you don't really know, right? You don't really know. So I propose is that, well, we are trading in a down market, right? If I think that, by October 1, we're going to go higher, but November 1, we're going to go lower, it's reasonable for me to be overall portfolio bearish. So when I'm saying long and short, I'm going to say, well, maybe I have one long position, but I have two short positions, right? Because in theory, I want the long to go to 400 and close some of my long positions. And if it does drop to 360, I'm going to start closing my short position. And I don't really know by next Friday, will we be higher or will we be lower? It's hard to say, right? We have to trade above 390 to go higher. And if we don't, after the Fed, if Wednesday we're still below, after the Fed meeting on Wednesday and Thursday we're still below 390, then we obviously go into 360. So this 390 is kind of the line in the sand right now. So important to be long and short. A lot of people say, well, I don't know how to be long and short. I only buy single legs. Okay, then if you buy single legs, consider buying calls and puts, right? You can have two puts. If you're not comfortable trading spreads, then maybe you have two puts and one call, right? The problem with puts and calls, again, especially if you're buying out of the money, the time is against you. But if you're not comfortable trading multi-legged trades, then consider 2 puts and 1 call, right? Or 1 put and 1 call. You know, if you're not comfortable trading options at all, consider, you know, buying spiders. You know, maybe for 1 share of spiders, you buy 2 shares of SH. And it's not 1 to 2 because they're a different price, but assuming equal weight, right? Assuming equal weight, you know, you have, you know, $500 in spiders, you have $1,000 in SH because they inversely correlated and they're 1-to-1, not in terms of number of shares, but the ratio. This is the ratio, right? So that's the approach. It's very difficult for new traders. This has been one of the more, you know, biggest feedback I see in support ticket. Basically, one is I'm not comfortable trading spreads or multi-legged strategies. 2, I'm not comfortable trading options at all. You know, we are trading in a bear market. I think bear market is going to remain here this year. Most likely, you know, it's going to spill out into the next year, right? The stats from today were, you know, 60% probability that outside, you know, Europe and Asia is going to be in recession next year, and 50% that the United States will be in recession next year. And, you know, statistically, I think 99% of the time when the probability rises above 30%, then you do have a recession. So it's reasonable to assume that we will have a recession, you know, maybe short-term recession, maybe long-term. I guess we'll determine based on duration of the inflation, how long the inflation is going to be persistently high. But we are trading in the bear market. In the bear market, you have these violent pullbacks and violent rallies, right? You've seen them. They last couple weeks, they last couple months. So since you don't know which next leg is up, but you know that if you believe that we are trading in the bear market and bear market to continue, I propose you either market neutral or you're bearish, right? So you have combination. And this is a very complicated concept. A lot of people complain about this, but I believe in this market, this is the only way to make money, right? You long the strong stocks like Apple, utilities, energy, and then you short weak stocks. I don't know, Google, you know, Bank of America, you know, consumer discretionary, right? So you build this portfolio in this ratio. This is a very important concept. Let me know if you guys have any questions. All right, so now that we went through this visualization example, right? Well, this is all nice and wonderful. What's next? I propose 50% of your portfolio to be in cash, right? When VIX is below 30, 20, you know, in bull market 30%, in bear market 50% in cash. And then portfolio allocate drawdown, I propose no more than 4 positions at 2.5% account value per position. A lot of people ask me, you know, well, what do I do? Well, if I have 4 positions, especially with options trading, if I have 4 positions, right? Okay, and let's say I buy call at $1, right? So I have 4 positions. I buy, you know, each call at $1. So I invested $400. But then it's a $10,000 portfolio, right? What do I do with the rest of the positions? With the rest of the cash? I have $9,000 in cash. My answer to this is that still stay with 4 positions and always look at the what are you buying? Because if you're buying out of the money spiders call and you spend in $1 or $2, you are still investing $38,000, right? If you're buying 1 contract of Apple, you have $14,000 invested into Apple, right? Especially if you sell credit put spreads or credit call spreads. But even a single put and call. First of all, if you spend in $1 on an Apple, that means you're buying out of the money calls. You know, 9 out of 10 times they will expire worthless and you will lose money, right, on single calls. So hopefully you have a combination of puts and calls. On some you're going to make money, on some you're going to lose money. But that is the mindset, right? Don't think about that you only invested. What do you do with the $9,000 that's sitting in cash? Translate each of your positions into equity, you know. And I actually have an opinion that if I wake you up in the middle of the night and I ask you, how much equity do you have in your portfolio? And a $10,000 portfolio, how much equity do you have? I mean, if you trade in stock, then you know, okay, I bought $9,000 worth of Apple, I have $9,000 of equity. So you know how much equity, you look at your balance on your broker dealer, it tells you exactly how much cash and how much equity you have. But if you trade in options, right, calls and puts, 9 out of 10 people do not know, right? They can say, well, I have $400 and I have $1,000 in options premium, in options value, and 9,000 is sitting in cash. But then the question is, if I translate these contracts into equity, what is your total amount? 9 out of 10 people are gonna say, I have no idea, because they don't do this multiplication. And my belief that if you don't know how much equity you have as an option trader, or if you don't know how much equity you have as a stock trader, then that means you're not going through the negative visualization exercises. You probably don't keep a journal. You probably don't grade your trades, and you probably just use mental stops, or you don't even have stops. In this environment, in the bear, I mean, that could have worked in the past 10 years in the bull market, right? But it's not going to work in the bear market, especially if the bear market lasts, not 6 months, but 18 months or 12 months, right? We could be, in June of next year and still in the bear market, right? So it's going to be 18 months. So I encourage you to, if there's one thing I want you to kind of consider, is always know how much equity you have and don't trade on margin, right? If you have one contract of Apple, you own $14,000 worth of stock, potentially, right? If that call gets assigned, you own $14,000 worth of Apple, right? You might not, obviously you cannot lose more than the premium of the call, right? But this is your exposure, right? And if you own $14,000 and market drops, 3%, if Amazon is down 3% or Apple is down 2%, that means you're down 2% of $14,000, right? Always think like that. Why are these exercises important? Again, because the most common mistake is number of positions and your maximum exposure, right? So these two rules, if you follow these two rules and you go through the negative, rehearsal exercises, and you determine that the maximum is 2.5% of your account value per position, then no matter what, you're not going to lose more than 10%. Right? We want to avoid going to, what are we concentrating on? The process, right? Process versus outcome. We're talking about dichotomy of control. The economic control is a Stoic idea of separating things that are within our control and things that are outside of our control. So trading, this is the most applicable, right? You don't really know what would be the outcome of CPI data, right? I didn't expect 5% drop in QQQ after the CPI data. So you don't really know the outcome, right? So you can't really concentrate on this, or you can go through, hindsight bias, right? And try to explain why your portfolio is down after CPI data, because that's outside of your control. What's within your control, things that you can control, and this is something, it's a Stoic concept, but you have to practice it. You can control number of positions, you can control your stop loss, that you're never going to be down more than 2.5%, and you can control your cash. So as long as you do that, and you don't break these rules, right, these pillars of trading, right, every trader should have a trading plan. It should be written down. You should treat it as a business, right? Business has operating agreement, right? You file, C Corp, S Corp, you write an operating agreement, and all the rules are outlined. How many, members you have, what the percentage, in order to come up with a new rule, what majority constitute, is it 51%, 65%? You know, when can you raise cash? You know, so you write these rules, it's written down, and it's agreed upon all the members of that LLC or SC Corp. Trading is the same thing. You have to have rules written down, right? You have to have that operating agreement that you will write it down, and you should sign it, right? You should sign it, maybe ask your spouse to sign it also. Or, I'm exaggerating, but the idea it's a written down set of rules that you don't break, right? You know, just like in business, if you want to change majority from 51% to 65%, you have to go through all the members, you have to vote, you have to amend your operating agreement. It takes time, right? It takes process. So, and until then, you don't break the rules of operating agreement, right? It's illegal. Trading is the same thing. It's your business. You should treat it as such. You should write down these rules. You should never break them. So, I mean, for some people, it might be 3 positions. Some people will say 5 positions. But, you know, for average retail investor, 20 positions or 10 positions in the bear market is probably inappropriate. You probably cannot, you know, keep track of 10 positions in the bear market when everyday market moves, you know, 1 or 2 or 3% a day. And if you're losing more than 2.5% of account value, you're probably gonna have a hard time recovering from these drops. So these rules, you write them down and you always follow them. And, you know, you're controlling your thoughts and actions, and you kind of realizing that the actions and thoughts of other people is outside of your control, and you shouldn't spend too much time thinking about it, analyzing, you know, oh, how could I have prevented 5% drop on Monday when CPI was worse than expected, right? You couldn't, right? You couldn't control the outcome of the CPI data, but you could control how you're preparing for that event. We're going to have a next event, right? We're going to have a Fed meeting on Wednesday. Same thing. Fed could be extremely hawkish. They can raise by 100 basis points. They could be dovish. They can say, listen, FedEx really scared us. You know, global economy is slowing down. Okay, let's do only 50 basis points. Right, and then market can rally, market can sell off. You don't know what's going to happen. But what you can control is going into this event, how many positions you have and how much cash you have, and you know what your exposure is. A Tradespoon will provide you the signals, will tell you which stocks we think outperform, which strategies will outperform, but you have to decide how many positions and what is the maximum number of contracts or shares. So these are the guidelines. I encourage you to write them down and always follow them. And the concept of the Stoic philosophy, right, is the idea that you can, you can know what the economy of control means. You can look up the definition, you can read upon it, but unless you practice it every day, you're not going to be a Stoic philosopher, right? You're not going to be a Stoic trader, right? And what is the goal of Stoic person is practice these concepts and avoid fight or flight response, right? You want to avoid fight or flight response or emotional response. We're all humans, we're all wired the same, very similar ways. And, when your portfolio is down 5%, you're going to get emotional, right? But you want to avoid this fight or flight response. The only way to avoid it is, again, number of position. You can be, I'm bullish, right? I think market is overdone and it'll probably bounce. But I realize that we can be at 370, right? I could be wrong, right? So my point is to make sure that I structure in such a way when if the trade goes against me, my portfolio is not down more than 10%. And actually I'm bearish. My overall portfolio is bearish right now. I have some long and short position, but I could be wrong, right? Maybe this is the bottom and market reaches, 430, right? Because I don't expect market to go, above this level. But what if it reaches this level? Well, my goal is not to lose more than 10% of my portfolio when, my stop levels get triggered, right? I probably gonna wait, I'm not gonna change my opinion until we get to above 430, whether we're trading in a bear market or not. So as long as we're below 430, we're in a bear market, and I'm gonna be either neutral portfolio, here I'm getting more neutral, here I'm getting more bearish, right? So that's a very important concept. Let me know if you have any questions. All right, so how do we help? We do have different services. I encourage you to consider Elite Circle. Why? Again, bear market moves very quickly. So you have access to our morning bell, closing bell, our recordings of all the events, and then you get messages. Every time I trade, you will get messages, right? Let's look at this. You can actually receive every time I trade, you will see, okay, I'm trimming SH, right? Inverse ETF. Market is oversold, so okay, I'm continuing to close SH. XLF, right? Market is oversold. I continue to trade around this 30 put, so I sold to open 30 put. And now I'm trying to close 35, 38 call spread, right? So continue to close bearish positions. You can get SMS message. You can every trade is explained then in the morning bell and closing bell, and you can get the video, and you can get SMS message every time I trade. So Elite Circle allows you to follow Shadow Trader, Spread Trader, all services where you have SMS message and you have access to my portfolio, whether it's a premium, robo, or elite. And then we have different services where we provide you the signals, and then you have to determine which one you want to trade, right? And we give you both bullish and bearish, like bullish, footlocker, right? If you want to see bearish, and footlocker is actually outperforming. So the model is doing a good job finding the stocks that are out, in the down market, footlocker is out. So that's the purpose of the model, to find stocks that, strong stocks that should outperform the market, or weak stocks that should underperform, right? And eBay is down, right? And so this is, you can be long footlocker and you can be short eBay, right? And then, market basically model that identifies the signals, but again, you don't, in terms of the rules, again, holding time 1 or 2 days, you don't want to risk more than 2.5% of account position, and no more than 4 positions. Active trader is holding time 1 or 2 days, weekly trader 1 or 2 weeks, monthly trader 1 or 2 months. Any questions so far? All right. Other tools, stock forecast toolbox. If you look at if you participate in live trading room or you watch the videos, this is something that I use on daily basis, right? You see 10-day prediction. Model actually saw that 390 will hold, right? It did turn negative, basically showing that we will revisit 381 by end of September, and we actually did. This is before the FedEx, because the data runs based on closing prices from previous days. So even before FedEx, model correctly identified that the 390 level will hold today, but will probably break down in the next 10 days, which I kind of anticipated, but I thought we're actually gonna get to at least 400 level or maybe higher. We have FedEx announcement overnight. Model doesn't know about this. So now we basically reach this level. Instead of end of September, we're already ahead of schedule, right? So that's bearish, right? FedEx caused the equilibrium between bulls and bears to break down, and now bulls have to trade above 390. As long as we're below 390, path of least resistance is to continue going lower. And if you switch to 6 months, right, same model, right, it learns on data movements and makes prediction. Longer term model is extremely bearish, right? It basically says, yes, we can bounce back to 405, 410, maybe, market can overshoot. Maybe it can get to 415, 420, but at 409, the market is overbought. It also predicted that 370 is a support, right? So the contrarian mind will say, well, we're already at 380, the low is 370, maybe it's time, especially if we get close to 370, this is probably the time to be long, right? If market is going to get to 370, my portfolio is probably going to be either neutral or slightly positive, because can we get to 360, 355? Maybe, but I know 360 based on the model, market is oversold. Right now, we were at 380. We're getting very close for the market to be extremely oversold, right? And so these models are very helpful to determine the trend, short-term, long-term, key support and resistance levels, right? You have to also realize that you can really assume So the two things you can derive from this model. You can derive where the support is and where overhead resistance for the most recent data. You also can see that the trend is to the downside. But a lot of people in February will take the screenshot and tell me, well, Vlad, you said model said February it's going to be 323 and we are at, I don't know, either 200 or we are at 400. A lot of things can happen between now and February, right? And we might or may not reach this level, right? We could. I actually think there's a high probability we will reach 320, maybe not by February, but by March, April, we'll get to 320. But on end of February, it's unreasonable to assume that the market is going to be 323. Same thing for 10-day prediction, right? You can assume that 390 is a support, 395 overhead resistance. You can assume that there is a downtrend, but it says on September 29th we're going to be at 381. You can assume that, right? We're already at 381, so we're either going to be below at 370 or we're actually going to bounce back and we're going to be at 400, right? Both scenarios are plausible. So these data points are showing you as for trend analysis purpose, so you can have reasonable expectations what are the key levels in the next 10 days or in the next 6 months, but not assume that on certain day any model can predict whether the stock market will be, right? There's no model out there that can tell you what the price of the stock will be on September 28th. It doesn't exist, right? It can tell you downward, upward, range, but a lot of people assume that you can predict where what the closing price will be on certain date. That very difficult, impossible. For next trading session, you can predict the range and close price. You can get very close, and I think that's what this model does. So that's possible, but predicting what's going to happen September 28th is impossible. So I know mostly it's people who new to trading or new to modeling, they open up these tickets, but unfortunately, it's, these tickets always show up. So this would be a misinterpretation of what the model can and cannot do, right? Any questions? You guys are very quiet. It's 10:10. Any questions? Virus, Walt, Andrei, Chandrin, Clayton, Dan? Any specific areas you guys want me to cover? Okay. Meanwhile, let's look at, it's all about interest rates, right? The equity market will follow the interest rates. So the good news, 2-year yield, well, not so good, almost reached 4%, right? Almost reached 4% session high, but the 10-year yield is actually, looks like it's stabilizing and actually pulled back, right? So 2-year yield looks like losing momentum, 10-year yield, starting to pull back. So, and dollar also starting to pull back. So if that pattern continues, if dollar is unable to break out of this range and 10-year yield will not break out of this range, then I think that we will have reversal. But again, I think the main event will be the Fed. My opinion that after the Fed, they're not going to say anything new, right? And as long as they don't say anything new, then the yield will drop and dollar will drop. If they're going to say something new and something bearish, hawkish, then dollar will rally, 10-year yield will break through the 3.5, and then the sell-off will accelerate. So it all depends on what Fed will say and how market participants will react to it. My assumption that if they don't say anything new and just continue with the hawkish stand, data-driven, 75 basis points in September, even if it's 75 basis points in November, I think the market short-term will bounce. If they're not going to say that, something more hawkish, 100 basis points, then the sell-off will accelerate. Any questions? And so far, I think market is struggling to regain its momentum. All right. Good. Technicals lead the model. TJ, I don't know if technicals lead the model. I'm not sure what that means. Technicals lead the model. Our model learns on end of day prices, right? It looks at the open, close, high. It looks at the volume and makes predictions. So it learns on patterns. It learns on patterns. If you want to know where the market is heading, right? Usually, you look at the leading indicator like high yield, right? High yield is 52-week low, right? You look at IWM, right? It's sitting at September low. You're looking at what else is so high yield, Russell 2000, ARC, innovation, right? These are the indicators that can tell you where QQQ and spiders will go, right? So high yield is a good forward-looking indicator. It's sitting at the 52-week low, right? It tested this level in June, July, and now in September. There are two things will happen. If high yield breaks through this level, market will sell off. If it bounces back, market will follow. So I would pay attention to the junk bonds, right? High yield corporate bonds as a proxy of where the market is going. I think the yield is leading the market, right? If 10-year yield is going to continue to drop, right? If 10-year yield, you're going to have these drops from 3.5 to 3.4, and that continues, the market will follow. Maybe not right away, but it will follow. If the model says one thing and the technical says another, believe the technical, at least in the short term. TJ, I mean, all technicals in all models, there are different data points, right? Usually you want them to align. If you look at the 10-day model, right, and model says supported at 390, overhead resistance 395, but you see after the FedEx market is trading at 390, yes, you should not assume that today market will bounce back to 395. Most likely not. And most likely, if it does bounce to 390, you will be the bears. You'll be met with bears. So if there is a discrepancy between what the model says and what your interpretation of the market is, then it just depends, right? On 6 months, if you're bullish and the model says bearish, I would believe the model, right? Because I think model is correct. 6 months prediction. For today, for the 10-day prediction, I know there is new information like FedEx, pre-announced, down 25%. FedEx hasn't been down 25% ever, right? Ever, right? So you can see that this is an outlier event. So I understand why the market is below 390, right? And I believe, I don't believe the model that it will reach 395, but I am using the model. I do agree with the model that we're trading in downward momentum short term. And right now, 390 is now what used to be support will become a main overhead resistance. Yes, you do want to be alignment, right? The best thing is, let's say long term. I look at the 6 months prediction, downward trend, right? So if you follow my trades, you know that every time market rally, I short the market, right? I short the market at 420, aggressively at 410. It drops to 380, it's approaching 370. I'm going to follow the model and get less and less bearish because I believe that model is correct and 370 level will hold. Thank you, TJ, for the question. Any other questions? All right, it's 10:18. Any other question? Kevin, welcome back. So, I mean, my opinion on these events, right? Sometimes I'm right, sometimes I'm wrong, but you look at market conditions, right? You know that market is oversold, right? If market was here, I would have said that on Wednesday, market will sell off, right? Because Fed is not going to say anything new. Market is overbought, so it should sell off. Same event, but here I'm going to say the opposite, right? Most likely market is going to rally, right? Because I always assume there will be no new information. And if there's no new information, then based on the technical, if the market is oversold, right? We've seen this, it's kind of, keep an eye on ABC pattern, right? This is a clear A, B, C pattern, right? You can see if I measure the moves, right? If I measure the moves, we dropped, first wave, we dropped 5%, we dropped 5%, and now we're down 3.5%. So at 5%, right, 376 here, I think it will be exhaustive, right? So somewhere between 376 and 381, this is market is oversold, and this C wave is down, is probably overdone and should rebound. What is the next event? What is the next wall that we can hit? Well, there's no other event than Fed on Wednesday, right? Probably bulls are not gonna be very aggressive going into the event, and bears are probably already want to take some, afraid of the short squeeze. They're going to be afraid of the short squeeze because, put call ratio is going to extremes. So my opinion, if there's nothing new going to be said, and which usually it's not, right? Then, Fed is going to repeat what they said, during the Jackson Hole meeting, right? He's not going to say anything different. That's what I believe in. So it's going to rebound, But obviously things have changed, right? There's new CPI data. You have data from FedEx. Fed listens to FedEx, right? I was reading that Greenspan was having, weekly meetings with FedEx CEO, right, to gauge the economy, right? I mean, maybe Powell and the rest of the Fed committee listens to FedEx earnings and guidelines, and maybe they will get a little bit more dovish. Maybe they say we'll raise 75 basis points, and we have no idea what we're going to do in November. We're going to wait. Okay, then that's the new information, right? And then market will rally. If they say no, we're going to raise by 100 basis points in September, and 100 basis points in November, well, market is going to sell off. So, but usually I assume no new information, so the market should bounce. It's kind of a contrarian thought process. I think 7 out of 10 times I'm correct. 30% of the time I'm not. Any other questions? Also, keep in mind we do have seasonal chart, right? We do have seasonal chart, which is part of your tool services, or we do have, elections, right? So there's different cycles, long-term, short-term cycles that play. One of the cycles, again, usually September, October, you see from the, we do have this short-term rally, which I kind of expected by September 17th. Doesn't look like we're going to have it because of the FedEx. And then again, drop in October, right? And then usually market starts rallying, and in November. So from seasonality point of view, from the annual seasonality, and from the 4-year, 7-year cycles, right? There's 4-year, 7-year, centennial, 10-year cycles. Usually, looking at the midterm election, market sells off, right? It drops, continues to be under pressure. right? Kind of sideways market to the downside, and then after midterm election, usually market rallies. So that is also one of my reasons why I think, in the next 50 days, market is, starting in November, after the midterm election, we will have a Christmas rally. It'll be limited. We're not going to make new highs, or, it's still going to be a bear market, but we will have, pretty decent rally, one of those, 10%, 15% rally. But for now, the passive, so seasonality is another tool that we have, helps me make decision, right? We have different screeners, talked about different pick services, and newsletters. Be sure to add info@tradespoon.com to your white label, to your list of contacts for your email provider, to make sure you get we have daily commentary, either blog or video blog, explaining what my view on the market is, right? That can help you determine the direction, key support and resistance, right? Whether they agree with the model or not. So I think it's important to get into a habit to at least spend 5 minutes a day watching, listening to the either video blog or market commentary. What else? We do have special. If you're looking for to pay less commissions, we do have partnership through Yellow Tunnel with the Trader. It's a brokerage in Chicago. You can get earnings power trader, and also if you open up an account, you only have to pay $10 commission. So if you're trading options, you probably, if I have to guess, spend, whether you're active or non-active, you're spending more than $10 per month. So depending on how much you spend, whether it's it could be $500, it could be $1,000 based on how many contracts you trade of savings. So it's a considerable savings. Consider joining. I'm going to put the link. Joining this broker dealer. Again, we do have marketing relationship, so full disclosure. Gate.org. I'm on the board of directors for Gate.org. Again, I was born in Ukraine. I have family there, so it's a very sensitive topic. This is a nonprofit organization where you can donate directly to Ukrainian families. There are millions of families that have been displaced, don't have food or medicine. We pre-screened candidates. They have to have at least 2 small children. So this is a quick way to help families in need, because a lot of them live in small cities and it's very hard to get help immediately, or sometimes impossible. So gate.org. And finally, YouTube, Tradespoon content. Join us on YouTube, Tradespoon content. Without actually being part of the elite circle, you can actually try it for free. On Wednesday, morning bell and closing bell, you can participate free to watch how I trade, to look at my trades, ask questions, and anything else. Yeah. Done. Thank you very much. Have a great weekend. All right, guys, that's all I have for today. Thank you very much. Have a great weekend. Recharge your batteries. Spend some quality time with friends and family. And market is going to stay turbulent, right? It's going to stay turbulent, and as long as we are trading below 390, expect more downward momentum until then. Thank you very much, and have a great day.